Hey, what's up, cash flow? I'm just really testing this thing out because I'm going to start doing this live streaming. So I just want to make sure I'm good to go. Can you hear me pretty good? How you guys doing? I want to know if you can hear me. Okay, very clear. Good. So that means I could get going then. So really, I just wanted to test this thing out because I want to start getting a little deeper, start doing some live streaming for you guys. So that's why I am testing this thing out today. So what you're going to see from me right now is I'm going to run through some of the pairs, just use a little bit of Ichimoku, show you some things, and then I'm going to show you a trade that I'm looking at. Looks like my voice is not matched up with this thing. I think I'm using OBS, so I think they have like a delay, so I'm going to probably have to fix that too. So just want to make sure everything's good before I really get deep into this thing, because you guys are going to get tired of me because you might see a lot of me, okay? So let's look at some pairs. I got everything I'm going to look at just marked here with a little yellow. So I'm going to start off with this Aussie USD, and basically what I'm looking at, guys, I'm using Ichimoku. Want to explain a little bit of stuff to you. The markets have been very quiet, haven't been a lot happening. So when I'm looking at the market and I see 1, 2, 3, 4, 5, 6 days inside of one candle, there's really nothing happening with the market. For you to try to get a trade, you're going to have a hard time trading this on the daily time frame using Ichimoku. So what I always suggest that people do when I see stuff like this, when I see the market inside of a candle for a couple days like that, I make a different kind of trade. I'm going to show you real quick. But also when we were looking at Ichimoku, when I had our live webinar session for members, we talked about taking a short trade right here where this blue line is, and really didn't get a lot of profit, but the market dropped. We expected it to drop down to Kijinsen because Kijinsen is your basically that's the level where you're going to see the market get back into equilibrium. So the market doesn't want to get too far away from this Kijinsen level, and either does Tenkan-sen. So when I take, let me get this off my chart, and right now we're inside this TK zone, which is bad because you could see we're flat with Tenkan-sen, we're flat with Kijinsen, we got a flat span A, and span B is moving to the upside. You're safe to trade the direction of span A most of the time when you look at that. All right, so if you're in a long trade and you see span A moving to the upside, you're probably good with your trade. But once you start seeing span A flatten out and drop into the downside, you're starting to lose that momentum. You're probably going to see the market drop to the downside. So that's where you're going to have your issues, okay? What I always try to tell people to do, this is hard to trade on the daily time frame. Like I said before, I'm going to explain to you what I'm doing with Williams percent R also. But I'm going to hide Ichimoku real quick. So what I like to do is this, and I'm going to show you on a better pair. This pair hasn't really done it much, but what I'll do is I'll box this market in. You want to box this thing in because you're looking inside that one candle, you're trading inside that range, you're consolidating. So then you want to go to your lower time frame. So 4 hours maybe, but probably like more so like the 1 hour time frame. So I'll get to the 1 hour time frame, I'll set up my levels a little better, and then I'll trade these upper and lower levels without Ichimoku, just using price action, just trading these levels. So I line this up a little bit better, but you could see really this is the level that I would stay with because you broke here a little bit, a little stuffy here, but this is where we bounced off a couple times, but we haven't really hit the top level too much. So I'm not going to even think about trading this pair with Ichimoku. If I'm going to trade this, I'm going to go to the 1 hour time frame and probably try with Ichimoku then. But you can see you're even flat then. You can see that really you're trading inside this one candle for hours. So the market isn't giving you much right now. A lot of traders like to force stuff, try to make stuff happen that's not there. That's where you have your issues at, okay? So let's go ahead and put Ichimoku back on the table. And then whoops, I took the, okay, there we go. And then let's go back to the daily, and then let's go to EURUSD. I don't even trade Euro USD. A lot of reasons I don't trade it. It's one of the most manipulated pairs, okay? But for me, I just don't have a lot of success with it. And the next thing, the one thing I was looking at here is like, I'm gonna take this off of the level. Now let's leave that there. You can see with Ichimoku, you got crossovers, too many crossovers. So first you got your TK crossover, boom, boom, boom. 1, 2, 3, 4 crossovers there, right? Then you could see the cloud crossing over many times. This is telling me that this market is flat, okay? So when I see a flat market, I want to see where the levels are. What levels are I'm going to look to trade the market? I always tell traders that you need a level, a signal, and a trigger to trade the market. If you don't have a level, a signal, and a trigger to trade the market, then what are you trading? All right. Because I don't just jump in the market anywhere. I need a level to trade at. At the level is where the market's going to make a decision. And that's where you have more like support or resistance. And basically support is what I mean. You have more support because you have somewhere to place your stop loss. All right. Because when you look at the market, you can't say, oh, I could afford 35 pip stop loss, or I could afford 50 pip stop loss. That doesn't make no difference to the market, how much you can afford. The market goes based off of the levels. That's where the market's going to and from. If you can use a level and then set your stop loss, that's how you're going to be okay. But if you just say you take this trade right here long and you say, well, I can afford 40 pips or 30 pips, but this level is 60 pips away from the market easily can move those 60 pips back down to this level. Why are you trading with a 35, 40, 50 pip stop loss? You need to be below that level if you're going to trade long. That's why it's best for you to wait for the market to come to these levels. Now with Ichimoku, it's telling me one thing. Basically, you could see this TK crossover was bullish. Then we got a big C clamp. This clamp is too big. Once you see the market reach an upper level, now this is what tells me this. I see the market get to this upper level here. So I drew this nice zone off of the wick. All right, so I used the upper wick and the body. So when the market came up to this level here, it didn't quite reach there, but when it got close to that level and you were far from Tenkan-sen, Kijin-sen, you had a big gap like that. I call this a C clamp because let's open this up. Look at, when you look at it, doesn't that look like a C clamp? If you know what a C clamp is, if you did any kind of working with any kind of machinery or tools, you'll know what a C clamp is. That's a big C clamp, all right? And when the market makes a C clamp like that, you're too far out of equilibrium. Tenkan-sen is far from equilibrium. Price is far from equilibrium. This is your equilibrium point, and you don't want to be that far away from it. All right, so let me put this back to auto. When you see that big gap, you shouldn't be going long. You should be waiting for the market to get back to equilibrium anywhere on your chart. You could see it right here. Like you had a drop, you started to get a gap, but it wasn't as big as most of them. But when they start getting too far away, you shouldn't be continuing that long move, especially when you see the market get to a support and resistance level. All right. So really with this, we're inside the TK zone. I'm waiting for the market to pull back to this level at 111,434. At this point, I'm going to see if I could get a trade off of the bounce of this level. If not, maybe we get down to this Kijin-sen or flat cloud. Now, once we start breaking through this Kijin-sen, then whatever, it's whatever it is, okay? Because then the Kijin-sen is like a trend line for you. Now, I don't really pay a lot of attention to it when the market's really flat like this and I'm getting a lot of crossovers, because you could see this level is pretty much ignored a lot. You break through there. Now you could see where we came back, touched on there. We barely broke through and then came right back. We broke through and came right back. So your Kijin-sen level is very important for you. And in a strong trending market, you're not getting back to Kijin-sen. You're probably getting back to Tenkan-sen and just keep rolling down that way. So that's why I trade Tenkan-sen, Kijin-sen levels. All right. I don't trade much of Kumo breakouts and stuff like that. TK crossovers. When you take a TK crossover trade, a lot of times the crossover, the market, like look at this crossover. Where was the market when the crossover happened? You're too far with the crossovers. But when you see angulation like that, that's a really good thing. So you want to take trades when you see angulation on Tenkan-sen, Kijin-sen. You don't want to take trades when they're flat. That tells you there's no momentum in the market, okay? So probably just go to a lower time frame and try to trade that. And a lot of people like to look for equilibrium. They like to see multiple time frame analysis on Ichimoku. I'm not going to get even deep into that right now because I really don't look for multiple time frame analysis with Ichimoku. What I look for is multiple time frame analysis with the market. I'll use Ichimoku as my bias, my daily bias. That daily market tells me the main thing, and then from there, I'll use multiple time frame analysis on a lower time frame, or else I'll just look for my trade on the lower time frame based off of my level. So, for instance, I'm looking for a trade at Kijinsen level, right? What I want to do is this. I know where my daily Kijinsen level is. That's going to be one of your strongest levels. I mark that level. So when that level is marked, I can now hide Ichimoku, because see what's going to happen is this. If I keep Ichimoku on here and go to 4 hour, all right, looks a lot different. I go to 1 hour. So when daily looks a lot different. Now daily, this is just a pullback, but on 4 hour, you think it's a trend. All right. And on hourly, you say that's a trend. So you start to get confused. What I like to do is I make up my mind what I'm going to do, my bias, where I'm looking for the trade, because daily saying we're bullish. If I'm bullish on daily, now I'm going to explain about this cloud also in a minute. What I'm going to look for is my trade on this level here. I'm going to go remove Ichimoku. And now I'm going to wait here for the market to come to this daily Kijinsen on the 4 hour time frame or the 1 hour time frame. And when the market gets to that level, back to the 4 hour, we'll go there for a minute. When the market gets to this level, then I start looking for my price action entry. I don't need Ichimoku anymore. I already made up my mind with the, I'm going to trade based off of the daily Ichimoku time frame, which gives me that overall bias. Now that bias can change, right? Yeah, it definitely could change and so forth. You was just watching the multiple time frame analysis video on the course, and I'm talking about it now. I get a lot deeper in there. This I'll tell you this way, just so you don't get confused, because a lot of people get confused. All right, don't want to see people getting confused and messed up. All right, so that's what I do here. And so as far as looking at EURUSD right now, basically I really wanted to see it get up into this zone so I could walk this zone with a trade, but it didn't really get up into the zone, and it started to correct itself. So now I'm looking where the market's going to bounce, if it's going to bounce and move higher, or if it's just going to break through and come back down to this trend line that I have drawn here. So I'll make up my mind. I'm always going to go the direction of the market. I'm actually going to always go the direction of the fractal breaks. So when the market's breaking these bull fractals, I'm going to the upside. If it's breaking these bear fractals, I'm trading to the downside, and I'm always looking for a correction. But the problem with this is just a correction, possibly. We don't know if it's going to turn into a bigger move to the downside or what. We're looking for it to bounce here and then move to the upside. So that's what I'm looking for on the EURUSD. All right. I didn't even plan to do this, guys. I just wanted to do this so I could start planning to do this. So I figured I'd talk about some of the major pairs while I'm doing this. And we're looking at the pound yen. To me, I'm not going to trade it with Ichimoku too much, because really you can see we're flat here. Don't really have good levels. You can have a crossover. Your clouds are starting to change. Let's go back real quick. I wanted to tell you about this cloud. Where we're on the pound. So let's go to the EURUSD again. Watch the clouds. So when you watch a cloud, whoops, don't want to change that. We want to move this so you could see how this really looks. You could see that gap, but if I covered in this Tenkan-sen Kijinsen zone, it would look like this cloud, but just a little bit quicker. It would look just like this cloud. Doesn't this bottom here look like this bottom? Doesn't this top look like this top? These clouds are the same as this Tenkan-sen Kijinsen. All right, but the thing is, when I see a thick cloud like this is volatility, and it's telling me one thing, guys. Do not trade the direction that the market has moved away from equilibrium. This thick cloud will tell you that also, because see, when you see a thick cloud, you don't want to see that when you're trying to go long, because what usually tells me is that we've hit a top or a bottom, depending on the downside. If I'm going to the downside, you'll see a thick cloud like this. When the cloud gets thick, span B's flat, span A starting to roll over. you're dropping. All right. So you don't want to continue going to the upside. You're going to lose many trades like that. So these are just little nuggets you can put in your trading journal and think about and remember when you see it happening, so you don't lose a trade because you think you're going to catch something. And a lot of things other people don't really do. A lot of traders don't do, newer traders anyway. They don't know where their levels of support and resistance are because you really don't know this level. All right. You wouldn't know this level was there if you don't put it on your chart. And then when you see the market moving up like this, you're just going long because you could see a good, nice long move to the upside. But are you running into anything that's going to halter you or stop you? Yes, you are. You're running into that resistance level that you don't see. And this cloud is telling you you're close to a resistance level because it's getting a lot of volatility, getting thick, starting to roll over. That's going to give me a sign that, hey, I might be at a top. And I always go to see if there's a top that I'm close to. All right. So the clouds can tell you a lot of things. All right. So let me move on. I think I got one on here where I'm just looking at a trade. Matter of fact, I don't know if I marked it, but there is one trade setup I wanted to really look at. There's a crossover here, getting ready to develop, really sporadic with the market here. I'd have to take Ichimoku off my chart and trade this a little bit different. I tell you exactly, you could see my zone here. What I'm actually doing really with this pair is I'm not trading Ichimoku here. I'm really looking for this bounce on this zone here. I want to see if I get a bounce. So a lot of times what I do if I'm not trading with Ichimoku, I'm trading with these zones. I have these zones marked on my chart. And when I break negative 80 on Williams percent R, when I'm breaking negative 80, I should be breaking levels also. If I'm not going to break levels, then I'm probably going to lose the downside momentum. I've got strong downside momentum at this point, but I'm waiting to see that first sign that we're getting bullish momentum because I'm looking for a bounce on this level. So when I see that, I'm looking for this break back above negative 80. Then I want to see my price action, and then I'm going to enter. Now, depending on how big my zone is, I walk this zone. So what I talk about walking this zone, when I get into courses, when we're talking about in webinars, when we look at some of these pairs and you have a zone. So let's say we got a nice zone like this. All right. I'll tell traders, basically, you're using this level. You always want to trade long off of the support level, but you always want to be above the market to get a trade. You don't want to be below the market. All right. Because here's what you want. So the market is right here. If the market's in the middle of this zone, I want to put my entry at the top of this zone. Right. But if the market's at the bottom of this zone, then I want to put my entry in the middle of this zone, and my stop loss does not change. It stays the same. I'm reducing my risk like this. Okay. I'm cutting my risk down, basically. All right. So that's what you want to really be doing. What else was I going to tell you guys? Yeah. So I'm watching this. Now, another trader tells me, new guy that I was talking to, he says, I don't trade those Kijinsen bounces. Now, this is the same thing. Kijinsen's coming. You're looking at a bounce on Kijinsen if you were looking at a Kijinsen level. And I said, why? Why don't you trade Kijinsen bounces? Oh, they don't work. I said, they don't work. Yeah, no, they don't work. Why? He says, because what happens is he does this. And this is the wrong thing for traders to do. He does this right here. Let me see if I could do this. So he tells me I'm watching the market and the market's dropping. So I put my buy entry right here. Oh, I messed up, guys. Sorry. I messed it up. But he puts his buy entry right here and the market comes down, triggers his buy entry and keeps going to the downside. I said, you're right. That's absolutely right, because it did not bounce. You want to see it bounce. So that way, you know that that's where the level and the market is holding support. You don't just put an entry there and say, well, this is the level I'm going to trade, and boom. If the trade comes here, I'm going to enter the market with an entry order here and a stop loss down here. If you had an entry order here with a stop loss down here, you got stopped out on this candle, and now this candle may go to the upside. You didn't do it the proper way. Your way should be, once it goes below your level, now you put your buy entry in right there. And your stop loss should be below the lowest wick of the zone. All right. So that's just a little tip on these zone trades that we do. I do a lot of zone trading, but this is the zone now. It's not that big, so I don't do it on a small zone like that. I just wait for price action here. All right, so let's put Ichimoku back. I'm going to run through the rest of these pairs real quick. If you have anything you want to ask me or say, I'll take some questions. But other than that, let's get through this. So we're on pound yen. Let's go to pound USD. Again, see, this is another one where you had a strong resistance level up here. You had a support level here, and I used these zones. All right, and then you could see the market come back up to this level and then drop. Now we kind of flattened out a little bit because we got too many crossovers. This is not good when you see this. And if you keep Ichimoku on your chart, when you see that, it's going to be really hard for you to trade the market, and you're not going to know really what you want to do. When I'm looking at this, again, I tell you, I don't really pay attention to the support levels of Tenkan-sen and Kijun-sen because I want to see what the market range is, okay? Because once you get deeper into, and on my course, I'm going to start putting out some videos for you guys on YouTube, but I'm going to start talking about the wave theory and all that stuff. So my next video coming out is going to be the wave theory, and then going to be the observation theory, time analysis, and all that. So when you start looking at this, you want to start seeing where these levels are, because there's ways to still trade these ranges with Ichimoku theories, not with Ichimoku lines, because everybody just thinks there's lines in Ichimoku. You just pay attention to these lines. I don't even pay attention to those lines as much as I do other things, okay? But many traders just look at these lines and that's what they know, and they think that's all there is to it. I'm looking at this pair dropping down to this zone here that I have marked at 123, 420. So when we get to this point here, you can see we're down below -80. All right, below that -80, I got this Williams %R set, should be on 14. Sometime I'll use it on 5, but I noticed that a lot of traders in my membership don't do well with it, because the problem is when they trade with the 5, they forget about the level. You still can't trade this. You cannot trade the indicator. You need to trade the market. So you need to know where the level is. Wait for the level before you trade. So what I'm looking at now is for the market to come down to 123, 420 right here. That's when I'm going to start looking for that price action entry and a break back above -80. At that point, we see that price action entry, we can probably get a buy opportunity to the upside, all right, from that point. Okay, so that's what I'm looking at. Just looking at some of the questions, if anybody has any. I didn't even let anyone know I was doing this. I just blew it up, want to see what happened. But I'm going to start scheduling some of this stuff, and we're going to start getting on this real. Going to start helping you guys learn this Ichimoku and basically just trading, period. I'm not, everyone thinks I'm just Ichimoku, but no, negative. That's not just me. But anyway, looking here, New Zealand dollar. So this one, again, you can see I boxed this in because really the market's not doing nothing and for the past 1, 2, 3, 4, 5, 6 days. So let's put Ichimoku on here. Still probably not going to help us much. Oh, I don't want to take these away. Those are my babies. I got to keep those on the chart. So you got a little bit of distance here, and you can see the gap. You can see we flattened out with Kijun-sen, all right? And so when I mark, if I put Fibonacci retracement levels on here, this will be my 50% retracement level right there. It's already there. I know what it is, all right? So I don't even need fibs on here because I know where the 50 is. Boom. So what I'm looking at basically is a 50% retracement to the downside. That's when I'm going to look to get in the trade. Now, the market has stalled here for the past 6 days. All right. So what I would still be looking for is a pullback to Kijun-sen, and the market is flat. You're flat Tenkan-sen, you're flat cloud, you're flat bottom. So when you see this flat, you have no momentum. So again, what I do is box the market in, go to the lower time frame, take Ichimoku off my chart, and just trade those levels. All right. You go to 1 hour time frame, you could trade these levels. So you would basically be looking for a bounce on this level. I'm going to move back to the upside. Now, eventually we're going to break, right? Because we're talking about getting down to, we're going to eventually break this level because we're talking about getting down to this point for the trend to continue. All right. So that's what I'm looking at right now. Not a lot. The markets are really slow right now. 2 weeks ago, we had a lot of really good trades, made over 1,000 pips. Ask any member that is in my membership, made over 1,000 pips. Okay. With just 5 trades, and we lost 1 out of 5. Won 4 trades, made over 1,000. Now this week, it's hard to get any good trades. So I want people to just understand you can't force trades. Let them come to you. They're there if you wait. Let the market talk to you. The name of this indicator is Williams percent R at the bottom. All right, so let's move on. I'm going to get out of here real quick. I'm going to get out of your way. I know you're getting tired of hearing me, so I'm going to get out of your way. But here again, we got US dollar CAD. Pretty nice looking. Again, this one slowed down, and the problem is we're inside the TK zone right here. You're in between the Tinkerson and your Keatonson level. So when you're inside that level, see, you want to, that's where you really want to look for your trades, because really in a trending market, you want to trade the bounce off of Tinkerson or Keatonson. And you could see you had a nice bounce right here as the market started to move. You had a bounce here with price action. So let me try to show you this a little bit better. I'm going to show you what I'm really looking at. Let's do this. Let's do this so you could see it. Let's take the background off and go okay. So now you could see without the cloud. If I'm just looking at Tinkerson Keatonson, I got my TK crossover, which is bearish right here. So I'm going to be trading to the downside. So really, you probably think the market was flat here. You really weren't paying attention to it, but then you could see it start to move a little bit. You get a bounce right there, and you get a rejection of this upper level of this whole zone. And when you see that anywhere on the chart with Ichimoku, when you see a bounce like that or a rejection, a little rejection, you just want to get ready to make your trade because you're looking at entering like this. Boom. Let that trigger you and you're in the trade. All right. So now we're inside the TK zone. I like to see this candle. If it was up against this level here, perfect trade. You put your entry at the bottom. We're inside this zone, so we don't know. The market may move back up higher here, or else you could just wait for your close below Tinkerson. Now also be aware, let's put the cloud back. Let's put that back. Plot that background. So also be aware of what? What was I getting ready to say? Be aware of what? Oh man, I got so much stuff going through my head that I want to say, and I'm like, I forget what I'm trying to tell y'all. But I'll remember in a minute. All right. We got that back. Oh yeah, what I was getting ready to say is be aware, watch, always look for your levels. So when you see the market like that, you can't look at the market like this, guys. Don't look at the market like this. You need a bird's eye view to see the market first. So when you get that bird's eye view, you already saw that this came down deep one time. Now you got a little bit of disequilibrium here because you got that gap. When you see that gap, guys, see if there's some support and resistance levels. All right, and then you're going to check something else. One more thing. So that's a level because look at this level. This level is good. Look at this level. All right, and then when I come over here, this level. And really this would be a zone. So the bottom of the zone would be here and the top of the zone would be here. So when you go back and look at that, look at this zone, what we just did. From looking at the market forward, we could see where it was strong backwards and lets us know where that level is. All right. So you could see how that market held this level. You could see that's a good level. So looking at that, what you want to do is this. Keep in mind that you got to trend to the downside. So yes, everybody wants to go to the downside, jump in there. Be careful because first of all, you could see the gap. You got too much of a gap right there. Angulation has stopped. Now you're starting to pick up a little bit. So you might see the market break through your TK zone. But will you get through this level? One thing you always want to do is look to see if there's some divergence. I like to use, you can use anything for divergence. You could use RSI. Stochastics is real good, but I use one thing, ultimate oscillator. I'll use the ultimate oscillator. Whoops. And I want to see if there's any divergence. If there's divergence, guys, not really. I mean, minor divergence right here, if you could say, and then it did move to the upside. And I don't really see any, like what I'll look for now is hidden divergence, which would be continuation to the downside, which we could still see. If this moves up a little bit higher, we'll probably see hidden divergence, and that'll be continuation to move to the downside. So we want to still get through this level. And I'm not going to get too deep on this. I don't even want to start explaining what this level is right now. But I'll say it real quick. It's the 2 level. And you need to get through the 2 level when you're trading. If you don't get through the 2 level, pretty much it's going to be fluctuation. All right. So you're going to fluctuate down here and then maybe go to the upside. So you want to get through there. So when you break this zone, you should be looking for two types of trades here. Either you're going to bounce off of Kijinsen up here, or you're going to break the zone and trade. And then you want to get through this level. All right. And you could even like set this up like a zone off of the wick and then try to get into your trade also. But you're using a lot of price action still. All right. CCI is good. Yes, it's good for divergence. All right, so let's move. Let's move. So we're on USDCAD. We're going to look at two more. US dollar Swiss franc and US dollar yen. US dollar Swiss franc. Not in love with this thing. All right, we're probably going to, the market is probably attempting to get back to this level here at 92.514, but I'm flat right here. So again, which way do we think the market's going to probably go based off of Ichimoku and off of the structure of the market? The market likes to move to these structure levels. This is one structure level. We broke structure up here. All right, and if we mark it here, so you see we broke structure, and this flat cloud is a good resistance point. All right, so I'm going to take Ichimoku off the chart for 1 second. Let's hide that. And you can see I have these levels drawn out on my chart. And I really looked for the market to pull all the way back up to this level to get a short. Now, it hasn't pulled up there yet, but it started to flatten out right here. This is still hard for me to trade, even if I box this one in because it's so small. I don't even think a 1 hour time frame is going to be good for me on this. All right, and I don't trade much lower than 1 hour time frame. You could see it's not that great. I mean, there's a couple bounces off of our levels, but nothing I would really be. I don't have to trade that. This is like me forcing a trade. All right, forcing to get a trade when I have to do stuff like this when there's really nothing there. All right, so what I'm doing is forcing a trade, hoping I could get something. Patience will get you something better. Like I said, 2 weeks ago we had over 1,000 pips. You think we're going to get that every week? We're not. Let me put Ichimoku back. Let's go back to the daily. And you're inside your TK zone. You have angulation on Tenkan-sen, which is weird. All right, because why should you say it's weird? Because the market's not going that way. All right, so we want to see Kijinsen start angling to the downside. The strongest trades are going to be like when you get trades like this. I already told you guys this, but when these two are together real tight with angulation, that first sign of angulation where they're together real tight, take that trade in that direction. All right, that's a real good sign. And if you look on your chart, anywhere you see that, more than likely you have a good move. All right, so this was one time right here where you saw that, especially busting out of that cloud. They were tight together, breakout right there, tight cloud. I mean tight Tenkan-sen, Kijinsen. Take that trade. All right, so they didn't tighten up here. They were flat here. You got angulation on both here. This is a good trade. They're not together, but you can see the angulation. So when you see that angulation with both of them to the downside, that's a good trade. That's what you want to see. Fractals tell me a lot. Fractals tell me the structure of the market. Fractals tell me where to trade the market. Tell me which direction to go with the market. People think fractals are a lagging indicator. They're actually a leading indicator. Somebody on YouTube told me on my fractal video, they said that the fractals are a lagging indicator. That's because they use them in a lagging way. I use them in a leading way. Them fractals tell me where to trade way before the market is even there. I can set up my trade a week before the market even gets there, or 2 weeks prior, depending on the fractals. But again, looking at Ichimoku here, we're flat Kijinsen, and you can see the market flattened out. Tenkan-sen was flat, but it started aiming to the downside. We want to see angulation, all right? And I think we're gonna, if we do get a chance to trade this, we can see this probably making it back down to 92.514. Let's go to our last pair. What's the last one we want to look at? I want to look at this US dollar yen. Again, ugly flat market. I usually take Ichimoku off my chart, trade the levels. If I look at this with Ichimoku, you can see too many crossovers. Tells me that the market is flat. You shouldn't have this many crossovers, especially a flat cloud. Tingers and keys crossing over often. Now, if you go to a lower time frame, you're probably better. But I like to always look at the daily time frame. If I go to the 1 hour, I probably look a little different. Let's take Ichimoku off here real quick. Okay, so now, again, see, I have to have a level to really trade. There's structure at these levels. This is the structure of the market where you want to see the market pull back down to maybe at this level 106.100. That's where you possibly could get an opportunity to trade. So if you're patient and just wait for that, you can see the market come down to that level maybe. If it doesn't, you just miss that trade. You don't get it. You just go on to another pair. I always tell traders one thing. Let's do this. Look at all these pairs you have to trade. And I talk about these every Sunday. I talk about from this point all the way up to this point. I go over my webinar and talk about every single pair in detail every Sunday. But if there's nothing at the USDCAD, why force anything? Because you have 25, 30 pairs to look at. This is like buying a car. The USDCAD car dealer doesn't have the car I want. I want a green Mercedes, all right? And I want to buy that Mercedes for $7,000 or less. This USDCAD has a yellow Mercedes for $10,000. Do you buy the car? You don't buy the car. All right, so then why do you take the trade? You do the same thing. You don't want that trade. It's the same thing as buying a car. If you're not going to buy that car, why would you do the same thing with a trade? Your mentality should be the same. All right. And then you look in here. If there's nothing there, you go to the next car dealer, which would be your Aussie yen, and then your Aussie New Zealand dollar car dealer, and then your Aussie US dollar car dealer. Go to these car dealers and find the car you want, the trade you want. Don't settle for anything. All right. If you want this to be your business, you got to trade it like a business and be serious. All right. So I'm about to get up out of here. I'm pretty much done. You could see my screen freezing up a minute. But I just want to say, guys, I appreciate you for following me, for being on my tube. Some of you guys are members with me. Appreciate you guys too. And just want to say, I didn't take a moment to praise God, but I want to give thanks to my Lord and Savior Jesus Christ, because he gave me the opportunity to be able to speak to you guys today, each and every day, to be able to do this. So I just want to say thank you and appreciate that. Appreciate God, appreciate his son, my Savior. And guys, till next time, you have a great one. And I'll let you know when I'm coming back. Keep your eyes open. God bless. So long.